Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? Man, nothing's probably worse than being one of the most hated men out there, only to find out that everything you said was going to happen ends up happening, and they still end up hating you. Man, Peter Schiff is a great guy to listen to. I learned a lot just listening to this man, but I've heard people badmouth this guy 7 Ways Till Sunday, and I'm not sure why. I think what it is, it's his bold confidence that really rubs people the wrong way. This man is very confident about the things that he says. And while he's at it, he has this way of just saying, hey, I told you so. Well, what did he tell us about recently? Before we get into it, though, do me a favor and hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. If you're thinking about buying gold and silver, and good Lord, right now is the time, go to our friends over at Money Metals Exchange. The link is down below in the description. If you're a first-time buyer and you spend more than $100, use promo code Pimpy, P-I-M-P-Y, and you will get a free half ounce of silver. All right, I haven't covered a whole lot about cryptos and gold and silver recently, and that's only because it's really been stagnant. There's not a lot really going on. But there are some things we do need to cover. I remember when I was talking about cryptos, I said a market crash was coming for cryptos, that they were overvalued. And I thought that Bitcoin would get down to somewhere around $20,000. It's there, but is it done falling is the bigger question. But remember, if you're going to jump on this bandwagon and try to ride it back up, you want to make sure that it has bottomed out. But anyways, this is amazing to see. I can't believe this. So Bitcoin has lost 68% of its value since it hit its highest peak. What did I say we would see? 40, 50, 60% reduction in value. Bitcoin right now is at $21,719. Ethereum is at $1,163. Cardano is at 50 cents. These prices are crazy to see now. XRP is at 32 cents. Solana is at $32.52. Polkadot is at $7.86. Dogecoin is at 5 cents. Shiba has added a zero. Yes, it has. It now has 5083. That's terrible. You don't want it to go in that direction. Polygon is at 40 cents. Still, as you can see, the blue check marks here. On a 52-week average, they are all the way over to the left. That's the wrong direction, my friends. Bitcoin has lost 68% of its overall value since it hit its highest peak. That shouldn't be surprising. We spoke about this getting ready to happen. Interesting enough that Saitama, the new version, starts to see some serious gains and then comes down just a little bit and then starts to see some serious gains. So the Saitama V2, the new coin, sitting at 2031. But it definitely is sitting in a lot better position than the old version. So Saitama sitting at 203. Well, now, look at here. The Russian ruble is now at 0.018. The last time I reported it, it was at 0.17. It continues to climb up in value. The Russian ruble is the strongest currency out there. Backing their currency up with gold was a smart move by Putin. So they're sitting at 0.018. Hopefully some of you guys were able to grab it when it was down in value around 0.0072. So yeah, if you just take a quick look right here, I mean, this wasn't that long ago. This is in November. This is about 8 months ago. It went from the highest point to where it is now. 68% loss in value. Right now, you don't see it going horizontal or stagnant. That's what you're looking for. You want to see it start going across instead of down. Gold has lost some as well. At its highest point of 2040, back in March of 2022, it is now down to $1,829.70. That is a loss of about 8%. So when it comes to which one is a better store of value, we know it's not Bitcoin. So there's no more of that argument. I keep hearing people go, man, Pimpy's going to come back. It's going to come back. You might be right. But that doesn't make it a strong store of value. A safe haven is something that protects your wealth, not loses it. You're going to have some ups and downs, but not at this percentage. 68% is a huge dang loss for Bitcoin. So gold has lost 8% since it hit its highest peak. But gold sitting at $1,829, not responding like it should when it comes to this type of economy due to manipulation. Silver's at $21.54. So as I said in the past, the silver definitely is like the sporadic hyper kid on sugar. Seriously, it goes up pretty quick, comes down pretty quick. So timing it is a little hard to do. But it is down 19% since its highest little peak right here recently, which was in March of this year, when it was around $26.89. It got slammed down majorly. Silver is one of those precious metals, like nickel. Nickel is held down. Remember when they shut the markets down twice? Yeah, people are waking up to this. Precious metals, copper, nickel, silver. You can't have the technology like we have today. You cannot push people into the Green New Deal without these metals. There's already a worldwide shortage. And so right now is a good time to be stocking up one or all of the above, but especially gold. It does protect your wealth. So again, silver, $21.54. There are so many bad indicators for crypto. I thought that this sucker would crash so bad that you would only see a handful of cryptos remaining. This article is a little bit older, but it does make you think. 1,100 Coinbase employees learned that they were losing their jobs when they were locked out of their work emails. CEO Brian Armstrong said it was to ensure not even a single person made a rash decision that harmed the business. Okay, that makes sense to me. So it's laying off 1,100 employees. This is not the only exchange doing it. There are multiple exchanges who are laying off their employees. Here's the thing that gets me. When you go and you read into a lot of these exchanges, a lot of these other cryptos, a lot of them banked on Bitcoin lasting forever and doing great and being stable. So how did they secure their own cryptocurrency? By investing into Bitcoin. There was a problem with that. If Bitcoin crashes, so does all the other ones. That's the thing that drove me crazy about cryptocurrencies. They go up together and down together instead of moving independently like they should. The smart thing would have been for them to take that money and then invested it into precious metals. But that's not what happened. Now we're seeing a lot of different cryptocurrencies talking about turning into an asset-backed cryptocurrency. There are some that already exist. And if you're going to try to invest into those specific types of cryptocurrencies, I would make sure that there's 100% transparency. They have to be able to be audited to know that the gold is there to support the cryptos that you have. This is a rough way to find out that you lost your job, is to go into your email and get a note from your boss saying, sorry, we no longer need you. Really rough way to find out that you no longer work there. But I do understand, like this article says, these people have access to a lot of people's personal information and data. The last thing you want is some bitter employee to just go through there and make things worse for you. So Coinbase did lay off 1,100, but like I said, they are not the only exchange laying off people. So that should tell you a lot about what you need to know as far as cryptos in its current stage. So as far as the Dow Jones, since its highest peak, which was, January the 3rd? Since January the 3rd to where it is now, it has lost about 19% of its value. Even the Dow Jones is doing better than Bitcoin is. That's really bad. But in all fairness, the stock markets are being artificially kept up. So I had warned everybody and made a suggestion that you take a percentage of your 401ks or your IRAs, move them over into gold and silver, and a lot of you did do that very thing. In the short term here, you're going to be more than happy that you made that decision. As far as those individuals who did not move into gold and silver when I made that suggestion, you can see right now that 401ks have lost an average of 20%. That's 1/5 of all your retirement money. This crash is just getting started. Because eventually they're going to stop stimulating the economy and they're going to stop artificially holding it up, and that sucker is going to come crashing down. This is why you're seeing the manipulation on gold and silver. The powers that be are trying to gobble up as much as possible before the doo-doo hits the fan. I'm hoping that the vast majority of you made that move to protect your retirement by leveraging it with gold and silver. All right, this is the Atlantis report. I love it. They have all kinds of great reports. This one wasn't that long ago. We're just going to listen to a few minutes of it because I want you to hear what Peter Schiff has to say about the economy, inflation, gold, and silver.
After all, inflation is all anybody is talking about. It is now the biggest problem confronting the nation. You can't turn on the news without hearing a story about inflation. All of the companies that are coming out with bad earnings, they're not really blaming it on COVID or Putin, they're blaming it on inflation. Now, of course, our leaders in government and the Fed, well, sure, they want to blame the inflation on Putin or COVID, but the reality is inflation is here. It is a major problem, and that's exactly what many of us who have been buying precious metals were expecting all along. And what's very frustrating is now that we've been proven right, we bet on inflation. We bet on inflation by buying gold and silver. We bet right. All the people that said there was no inflation to worry about, they were wrong. Yet it's very frustrating that even though we were right, we're not getting rewarded for being right in the price of our gold and silver that should be much higher.
Yes, it should. And when you hear from every expert out there, they will tell you point blank that it is being manipulated for now.
Well, first of all, let me start out by saying inflation isn't new. Just because a lot of people are finally talking about inflation, that doesn't mean that inflation has suddenly appeared and it was missing in action all this time. Inflation has been with us for over a decade. I mean, it's been with us for many decades, but in particular, starting with the 2008 financial crisis, when the Federal Reserve responded to that crisis with quantitative easing, that was inflation. So we've been experiencing inflation under the guise of quantitative easing, because quantitative easing is simply a euphemism for inflation. The government didn't want to admit that its policy response to the Great Recession was to create inflation, so it named inflation quantitative easing, which sounded like it was a good thing or a smart thing. It was a way to dress up a really bad thing. Now, what happened early on with inflation, and the reason that nobody really cared about it, was the way the inflation entered our economy and the financial system. The greatest impact was on financial assets. Stock prices went up, bond prices went up, real estate prices went up, a lot of asset prices went up, and when that happened, a lot of Americans who owned those assets felt richer, and therefore they weren't upset that the cost of living was also going up because their wealth was going up a lot faster, at least on paper, but also the government was lying to the public about how much the cost of living was going up because it was reporting the increase through the CPI, and the way the CPI has been engineered, it really disguises a lot of the price increases, and so the public didn't realize how much prices were rising. I mean,
See, this is what I was talking about. When I say these types of things, people go, oh man, you're just a Republican. No, first of all, I'm an independent, and you're just slamming Dems. Well, I was a lifelong Democrat and a Democratic strategist. When I point my fingers at them, it is for a reason. When Obama took office, him going into the quantitative easing was the worst thing for us. He definitely wanted to destroy this country from the inside out. He lied about the unemployment numbers. He hid them. He changed the formula. He lied about the debt. He lied about inflation. All the formulas he used to report data that was necessary for us to make smart investment decisions, he lied about it. They artificially pumped up the stock market. For the past couple years, I've been saying on here, hey, you guys, these numbers are not real. They're artificially pumped. We are going to have a market crash. Everybody kept saying, no, man, it's doing good. Look at us. We're flying up there. We got all this value, my 401ks, my IRAs. And I kept saying, listen to me. Just protect yourself is all I'm saying. This is definitely not over. It's going to get worse, and I mean much worse. It's already starting. So don't keep procrastinating with your 401ks thinking it's going to rebound. You're going to hear Peter Schiff in here talk about this. The problem with this crash is people are so used to the market going up and down with huge volatility swings that they have been conditioned. And I brought that up at one time saying, look at people have been conditioned to think that you're going to buy on the dip and it's going to rebound. And I said, eventually, as it continues to lose the value of your asset, you're going to keep holding on to it, expecting it to rebound. Now, I'm not saying that it won't rebound, but it's not going to rebound as quick as we're used to seeing it, especially with the cryptocurrencies. Remember that. We see them go down and we see them go up with huge swings. The same with the stock market. We have quantitative tightening coming up. That's when they start taking money out of circulation. Get ready for that because that's going to be a doozy.
They probably felt it, but they didn't see any official confirmation. And certainly investors didn't get that confirmation. They were looking at the CPI and they assumed that inflation was under control when beneath the surface it was actually breaking out. Now, what happened with COVID-19 kicked the inflation into a whole new gear because the policy response to COVID was to create even more inflation after COVID than had been created before. QE4 was actually bigger than 1, 2, and 3 combined, which is something I was warning for years. I was telling people that when the Fed did do QE4, that it would be bigger than the first 3 combined, and it was. And in fact, when they do QE5, which they are going to do, it will be bigger than the first 4 QEs combined.
If that happens, that will absolutely positively kill the dollar. There is no ifs, ands, or but about it.
Inflation into a whole new gear because while we cranked up the printing presses like never before, we basically ordered people to stop working. We told people to go home and not produce goods and services, but just cash government checks. We wanted to replace the lost incomes with a printing press. So people weren't earning money anymore, but the Federal Reserve was printing money so that people could buy things that they were no longer producing. So it was a perfect storm of inflation, and I warned about it from the very beginning. When most people were talking about how COVID was deflationary, I explained that it would have been deflationary had the Federal Reserve and the U.S. government done the right thing and contracted money supply so that demand would fall along with supply. Instead, we did the opposite of what we should have done. We cranked up the money supply. We stimulated an economy. Even though the economy was producing less goods and services, we printed more money to buy a diminished supply of goods and services. And I predicted that we would see massive increases in consumer prices.
And to think, all the people giving Trump hell, the Democrats and the people on the left raising hell through the media, claiming that when Trump went into a trade war with China, that he was going to cause a war or he was going to cause a market crash. No, he wanted us to start manufacturing again here. We have been outsourcing all of our manufacturing to cheaper labor, bigger profit margins. So when Trump was trying to prevent people from outsourcing manufacturing jobs and to bring it back here into the United States, that's so we can start producing again. You see, whenever there's a huge economical crash, the country that manufactures is the one who comes out faster and better than the other countries. And we outsource all of our stuff over everywhere, man. China, Vietnam, Malaysia, Thailand, you name it. And that's what Trump was trying to change when he said America first. He wanted those manufacturing jobs here.
And that's what's happening. And in fact, this is just the beginning. But the question that everybody is asking is, why isn't the price of gold and silver reacting to all this inflation? After all, at times it feels like the price of everything is going up, going way up, except gold and silver, which doesn't make sense because gold and silver should be particularly sensitive not only to today's inflation, but to tomorrow's inflation, because gold is here forever. And so what gold can do is take all of the future expectations of inflation and represent them today in today's price of gold. Gold can discount all that future inflation. And that is the problem, because even though we have a lot of inflation today, investors still think we won't have inflation tomorrow. That is the real key. Yes, we have a lot of inflation, but investors are still not worried about inflation. Why? Because the Federal Reserve is promising to solve the problem. The Federal Reserve is telling the markets that inflation is going to go away, that the Federal Reserve has the tools to put this genie right back in the bottle before it does any real damage. And so don't worry, Jerome Powell and all his comrades are on the job, and they're going to make sure that inflation comes right back down to 2%.
Meanwhile, they're stocking up on it like there's no tomorrow. Like I say, watch what they do, not what they say. Anyways, my friends, I hope you did hedge against inflation and you made that move to protect your retirement and 401 and IRA investments by moving 25-30% of your holdings into gold and silver. Stop panicking about the value of gold and silver at the moment. It's not going to stay there, and everybody knows it. Just hang tight. Let these jokers do what they're doing. Stop focusing on the money and just keep stacking. Do me a favor, hit the thumbs up button if you're not a subscriber. Please do so, because when you do, it helps out the channel, and I surely do appreciate it. And I'll catch you later. I'm out.